hammered last night. Follow through from the United States markets. Asia tends to do or follow through exactly with the U.S. markets, except for the Shanghai market. Sometimes Shanghai does its own thing based on Chinese economic news, but Japan and Hong Kong, the Hang Seng, are almost always lockstep with what we do. If a recovery is going to begin, it comes in Europe, and in Europe, the German market recovered overnight. And the German market probably recovered because Merkel was talking about the possibility of core EU members versus everybody else. So it's just really hard to see this mess in the EU and the resolving itself any other way than some form of breakup. Best case scenario would be two-tiered, the rich uncles and the poor nephews and cousins, something like that. My guess is that we are seeing the demise of the EU, and if the United States does not quickly get back on the growth path it's coming to our shores, our Congress will try to put all tough decisions behind them until the 2012 elections, so both parties can campaign on what they feel gets them elected. But we're not too far behind what's going on. What we have that helps us right now over the EU is that our restrictions in our union laws and our union labor force are much less restrictive than Europe. So we have the potential for growth with the right policies out of our government, and those right policies would be, number one, getting spending under control. Number two, getting a regulatory environment that fosters growth. Number three, revision in the tax code. And those three things would at least bring back the potential for growth. Growth solves a lot of problems, and our population base is still growing, not strictly from immigrants. Our birth rate is high enough to replace the current society, but when you put the immigrants on top of it, we still have a growing, robust economy based on the assumption that the HIV or the visa program brings in skilled, educated workers as opposed to allowing the uneducated, unskilled workers to pour into our country. And again, that's part of the political process. The more dependent a person is on government, the more likely they are to vote for the status quo and, in fact, improvement in the current situation. So we've got a lot of issues to solve. We can still solve them, but we're fast running out of time here in the United States. So the premium for our stocks, the premium for our treasuries will continue because of our potential to turn around our situation. The E-mini went with the German DAX. It's up off of its lows. Our market is off its highs. We've talked all week about how resistance starts at 130.20 with 130.28 to 131 even best resistance, and we see that again in the overnight market. So for those of you that trade with us, follow us, that can trade the overnight markets, I mean, it's found money. I mean, it's just this damn thing trades so technically. What do you mean by that? Here's our 4/5 letter ledge. There's the high. The 2-letter ledge holds. The market starts down. London retests it right here in M period. There's your London high. Keying off of the German market. And the market just comes lower. And where does it stop? Yesterday's last rotate down was in I period at 13, and they get stops beneath 12, and here we find ourselves. So this market is, I mean, you can just count on support and resistance holding. Now, I see this retest of this breakout from the other day right in here. Basically, the 7-8 area is a possibility. So I've got the buck to 08 is pretty good support. The primary dealers aren't going to allow this market to go straight down. I mean, there'd be no incentive to move the 30-year paper. And who buys 30-year paper? Institutions that are guaranteeing annuities, that are guaranteeing retirement, cash certain. And they don't, that cash certain at such and such a year does not include, obviously, inflation, but this is one way where you can historically have been able to guarantee that there would be money there for those annuities you've sold or for the defined pension plans or whatever else you've got. So that's where that paper moves. So I would say that a very, very aggressive sell would be 15s to 19s. Obviously, we'd like to get the selling done in this area, leaning against this point. So maybe 19s are better on where we are right now, but we are in the band right now, so to speak. Jobless claims 400 greater than 410 takes us lower. Less than 390 supports what we're doing. Nobody will pay attention to trade deficit. Pretty well expected to be 45, 46. So for math purposes, 50 billion deficit. And most of that is off of oil, equals a $600 billion deficit. And think about how becoming energy independent would change this number. And that's another thing that we can do pretty easily, is to quit sending all this money overseas to countries that have no doubt in anybody's mind they do not have our best interests in mind. If we started to do that, think about the funding for terrorism that comes out of the Middle East, comes out of Russia. All sorts of things we clean up, and we can do it if we're allowed to do it by our government. But our government refuses to let us become energy independent for keeping particular constituencies happy. Well, there's a lot of, my point is there's a lot of stuff that could happen. We got $2 trillion on the sidelines. We are the engine of growth. The ideas, the patents, the big concepts, the big markets, all here. Wouldn't take much to bring offshore business back onshore. So the United States situation is not anywhere comparable to the EU's, is the point I'm trying to make. We have a lot of potential. There's a lot of pent-up demand. Think of the frustration of the people over the last 3 years and the growth plans that have been shelved and put on the sidelines based on what's coming out of DC these days. And it's not gridlock that's holding us back. It's tax policy, it's industrial policy, etc. What's the easiest way to stay in office for a politician? What's the committee they all want to be on? They want to be on the Ways and Means. That's tax. And passing out tax goodies is an easy way to stay in office. Okay, 9 to 13, our second buy zone yesterday is the aggressive buy zone. They may take that to get in, but I think we have a shot at 5 to 9 where they can go back in and retest that breakout from the 6-7 area the other day. On the sell side, mean greens at 19, the upper end of our very aggressive sell band at 15 to 19. Maybe it's 19 to 23 when it's all said and done. The market has moved a little bit higher from where it was when I did my analysis. Get short to retest support at 12 based on some strength in the E-mini. and then look to take it higher. If the E-mini fails in this, just like yesterday, we said it might take 46s to get in. If we can't get through that 45, 46 area, then the short can't develop. Just won't. 3,200 starting out this morning. I'll be tracking this to see what kind of support comes in. Off of this screen, you can see the red still owns it off our panel number 2, a little bit over the blue. So I think we do have one short, and then we'll see if it can develop and take off from there. Okay, the E-mini got slammed yesterday. The Dow was off, I think, 380, 390 points. E-mini was well off too. Yeah, Reg, I mean, it's the same thing for American coal companies. If they won't allow us to burn it here, we're going to ship our coal to Japan and other places. It's just the way it is. And, I mean, it's nuts. Economic suicide, as per plan. When the Luddites get in control of a government and non-profit environmentalists groups were given the ability to sue for others, to bring class action suits, whether there's actually others out there or not, and some of them actually are funded by the U.S. government. So the lack of energy, onshore energy development and offshore for the U.S. is politically controlled. And why do the politicians listen to them? Campaign contributions, pretty easy. Okay, here's your tractor. We've rejected prices over 43. We've got news on the half hour. Greater than 410. Bad. Less than 390. Good. The default's been 400,000 on that, and the numbers have been coming in pretty close. We have had better than expected economic news over the last 3 or 4 weeks. So we could come in at the low end of the range. And if I were going to guess where the market, we might get up into this 48 area, stops above 50, but this is the area where this 45 area, 46 is where you'd expect the market to stop based on this structure. And you'd pick that off over here too. So 45 to 50 is probably pretty stout resistance. Getting stops above 50 is a pretty nice target. But if you put all of this together, you can see that we're dealing with a B. And if you're going to guess where development might be today, maybe 35. So we'll see how that works out. We are subject to surprise news out of the EU, out of Germany. Merkel's comments that perhaps a two-tiered EU structure might be the solution already shows you how they're thinking. And I mean, they're really just, it's reality. The unwinding of all the loans, all the credit default swaps, the natural seeking of an interest rate for all the pigs nations. I mean, that's beyond messy. It gives us a lot of trading opportunities. I mean, it's good for us, but my guess is the EU won't be in 10 years, maybe even faster, 5 to 10 years, what it is today. Okay, looking at this screen, what is 1245, anybody? What kind of a number? A market number. And it's a number that could hold, and it's also resistance. And the point I'm trying to make here, everybody says, what the hell is a market number? And what you have to learn how to do when you go in and look for structures, you've got to identify these market numbers and see how they play. And because this thing trades in nickels, that's where it is. And you just kind of, the first place you start is you start on the right side of the screen, the long-term distribution. And then you move in, and then you look for pivot highs and pivot lows. Last rotate up, last rotate down. That corresponds with market numbers slash the long-term distribution slash pivot highs and pivot lows, and then that's where your support and resistance comes from. Well, Adobe doesn't like what I'm doing right now, so let's see if we can do it this way. There we go. Okay, I just shrunk the long-term distribution on the side. So the first sell zone, and it's very, very aggressive, and we know they like to get stops above the overnight session high, would be 44.50 to 46.50. That would allow them to go a bit higher, get the stops above 45, and then come back and probe where support is or might be. And I'm kind of guessing right now maybe development around 1235 today. So 44.50 to 46.50, it's aggressive. For first resistance is then basically 12.50 plus or minus. Support, the first real clean break in the market is right here at 37.50. Get this little rotate here, so there's your first support band off of this screen. So looking at 35, and you can see over here 30, and then your 20 to 25 on the way down. So I'd like to get short first, come back down, see where support is. Might be 35, 37, might be 30 plus or minus, and we'll pick it up from there. News on the half hour. 400 in jobless claims, 45.9 billion in trade deficit. We'll comment on that and we'll pick it up thereafter. So when we look at the long, when we're figuring out where support and resistance lies, market numbers, long-term distribution, most recent high volume, low volume numbers in the market's memory, pivot highs, pivot lows, and you come in and you get a pretty good feel for it, but it really centers on the market numbers because that's the way markets trade. Okay, news in 5, we'll see what it is, and then we'll come back after that later.